Welcome everyone, and thank you for joining us for another episode of Highwaymen Social. Today I have with us a very important guest, Brit Deviney. He is an expert in finances, and he is also a Highwayman collector and a collector of hard assets of a wide variety of things. And I'd like to share with you a little bit about the idea of collectibles in a portfolio and how all that works and how hard assets work as a percentage of a total portfolio value. Brit, you're an expert in the world of finance. You've been doing this for most of your life. Give us a little bit about your background.
Okay, I'm a third generation native Floridian. I was born and raised in West Palm Beach, Florida, educated at Elon College, North Carolina, spent a couple years in the US military, traveled around the United States and wound up coming back here to Florida because this is a place I really love to live and I don't want to live anywhere else. So this is it, I'm staying here. 26 years experience in the finance industry. I'm an independent financial planner. I work with everything from small families to businesses. I sit on the Palm Beach County Investment Advisory Committee where we oversee $4.1 billion in assets. So I have quite an extensive amount of knowledge and experience within this industry, working with families, and I'm glad to be here. I'm thrilled that you asked me to come along here.
Well, thank you for joining us. I really appreciate you. Brit, let's get right to it because there's a lot that we want to cover today, and some of the questions are quite complex as you begin to talk about finances. Naturally the story is about the Highwaymen and how those assets have performed historically. You're a significant Highwayman collector in addition to several other things. Let's talk a little bit about portfolio diversification in the beginning. We look at major houses and they traditionally diversify portfolios with things like and hard assets like gold and silver and other hard assets. And how do hard assets like gold and silver and collectibles and art contribute to the portfolio diversification? How does all that work?
Well, before we even get started, my compliance officer, I can hear them whispering in my ear. So I have to start off by saying past performance does not guarantee future results. So whatever we're going to talk about here. Yes. All right. Okay. So with that being said, gold and art. So if we're going to talk about gold and art, what are they? Well, as you said, they're a hard asset. Some of the larger houses actually have more than that. They use commodities, energy, real estate, things that we talk about hard assets you can actually put your hands on. And they have a very low correlation rate to stocks and bonds. And what I mean by that is where you're in a market currently that we're experiencing now with high volatility, traditionally investors want to migrate to hard assets such as gold, silver, precious metals, gemstones, art, and so on, because they don't have the same type of flexibility that the market does. They tend to hold their status quo and then slowly appreciate over time.
Right. We covered this in a previous podcast with a gentleman who has a doctor's degree in psychology, and the psychology of all this is with hard assets you tend to hold them and they appreciate at a softer, more consistent rate, as where with items of greater liquidity, particularly in the current generations, tend to be in and out a day, a week, an hour. Do you see the hard asset creating greater stability for a portfolio, or do you think it's an asset that when stocks and bonds are falling, hard assets rise? Is it time to pull the trigger, sell the hard assets and balance the portfolio, or is it steady the course?
I don't know if I'm going to say it's going to answer your question, but I'm just going to give you an overall umbrella, I guess you could say, of when I sit down and I talk to a client and they want to talk about art or gold or jewelry. And that is 10% to 15% of your portfolio assets can be in some type of hard asset. That can be art, real estate, gold, silver, gems, and so on. So when we talk about that and we sit down and we discuss that, I feel it's perfectly okay to have that percentage or a larger percentage in your overall portfolio, but that's something you're going to hold for a while. And you want that diversification, and you should expect a 5 to 8% rate of return on those hard assets. Now, we've seen swings in gold. And even though we talk about gold being a hard asset, I would like to say I don't view it as a hard asset. I view it as a hedge.
There we go. Yes. Inflation hedge.
Yes, a hedge, because gold is hedging against inflation and devaluation of a currency.
Exactly.
It's not to be confused with buying real estate or art, which is something that the end user consumer wants to appreciate over time at a slower rate, where we've had a spike in gold recently in the last couple months.
Right.
Because of what? We've had a volatile market, which has caused people to panic, sell off, and when you have a volatile market and people are selling, where do they run to?
Hard assets.
Hard assets.
Right.
All right. So gold is a hedge to be also.
And art serves that same purpose as a hedge?
No, it doesn't.
No.
All right. Because it's never been viewed as a hedge. Gold has always been tied directly to our monetary system.
Right.
And we talk about the gold and the silver dollars that we've had, and the silver blue stamps on the dollars, and the good faith and backing of the U.S. government was always backed by gold and silver. So I don't view that as a hard asset, even though technically it is. I view it more as a hedge, like insurance.
Got it.
Okay.
Okay. Hedge against market volatility. You and I have talked a lot about collectibles and how you view an acquisition. This is something that I just want folks to hear. And we talk about things that you buy. Quite naturally, when you buy art, you look at it and you go, I expect yes, I'm going to look at it. Yes, I'm going to enjoy it. But I expect, not hope for, I expect a return on it. Right down to a watch, you know what I mean? There's a certain level at which it's home decor and
Right.
jewelry, things
Right.
of that sort. But when you get to spending any real value on it, you expect a return on your investment. And over a long haul, 5, 8, 10%. How do you feel the Highwaymen have performed in terms of and give me some examples if you have.
Wow. Okay. Good question. I think right now, well, I don't think, I know right now, if you look at what the market trends have been for paintings, you can track them online through various auction houses, and you can see a painting that was January of 2020, where it is in January of 22. It comes back around to January of 25, and you have seen significant increases in this market. Would I say what else that's out there that would be this well performing? Gold over the last, I would say, 6 to 8 months has done very well. Certain watches, men's watches.
Men's watches have been through the roof.
Have gone through the roof.
Yeah.
We've seen a change from gold men's watches back to silver, which is more of a less flashy type of look, predominantly requested by the younger generation. So
right.
the baby boomers weren't into them as much as the Gen X's, which is me, who likes golds and a little flash. And then the millennials have gone back to the non-flashy type metals. So, is that can you predict something along those lines? No, I don't think you can. That's just a particular taste of a generation and what they like.
Let's talk about that for a second. Right. When we talk about hard assets and collectibles in balancing a portfolio, the challenge always has been with hard assets, the subject of liquidity. Mm-hmm. Stocks and bonds are highly liquid, but when we look at the millennial generation, the Gen X, I don't want to say, I'll just start with the millennials because I think that's really where it happened. The millennial generation, Gen Z, all of the generations thereafter have really mastered the liquidity problem with things like Facebook Marketplace and eBay, things that we originally looked at. It was a novelty. eBay was a novelty. It was a toy. And then it became a tool. Mm-hmm. And then it became passé with Facebook Marketplace. And now they're all a necessity. And they become the solution, the liquidity solution to hard assets. So you can hold these things in your portfolio and go direct consumer to consumer, find a buyer with almost instant markets, and have your asset perform. It allows these assets to migrate from hard assets to soft assets back and forth, creating opportunity in the market. What are your thoughts on that?
I think you just covered it all. I mean, you're correct. The advancement of technology, eBay first started it with getting something out in front of millions of viewers. Auction houses behind them a little bit on the amount of volume that they can.
Whole new world in auctions.
Whole new world auction houses.
Yeah.
I think we bring up about Facebook Marketplace is interesting because I have personally used that, and you can design your search by zip code all the way up to state to location. And being that this the Highwaymen art movement is right now an outsider art movement that is trying to be changed to a more of a global movement, or I don't know if I would say global, but you've
certainly
told me
a national story.
Hey, you've told me that you found pieces overseas.
We find pieces overseas. We ship to Singapore,
Okay.
and that dovetails into the very nature of what Gen X and Gen Z, the millennials,
Yes.
have all done. We no longer have auction houses with customers. The platforms, if you will, have pooled all of our customers together. So it doesn't matter whether you're buying a Harold Newton painting from this company or a company that you've never heard of yesterday. As long as the product is authentic and it arrives in a timely fashion, it's all the same to you. So there's more this pooling of assets, pooling of customers that creates greater stability in the marketplace, and we've seen that in the auction world. And
You just brought up something, and we're going to go off topic on this, but you said authentic, and you brought that up.
That's a big issue.
How is it authentic? And I do want to say that if I'm dealing with my clients, one of the first things I talk to them about is making sure the authenticity of whatever it is that you're collecting is there. And I think that whereas we've got the advancement of the eBays and the search engines that can go all over the world, you really need to make sure that whoever you're dealing with is a reputable person and it can verify it, because the last thing you want to do is spend $8,000 to $10,000 on a piece or more, and find out that you're getting a fake Harold Newton or a fake Rolex or something.
Right. When you look at least with Manor Auctions, when you look at the back of each of those paintings has a hologram certificate of authenticity on it, and that guarantee carries through, or a money back guarantee carries through. Many companies are caveat emptor. Okay, so it's a buyer beware environment, but the advantage of what that next generation, the generation that followed my generation, has done with the digital technology, it allows people who are experts in the field, hundreds of people, to look at an item and go, that one's not real. And we all tend to agree on it. If you're an outlier in there and you go, well, I'm going to hope against the tide, well, you get what you get when you do what you did. But it does provide an opportunity to make sure that items are authentic by having more fresh eyes look at it. And that dovetails into your investment strategy and making sure that what you're doing is the right thing every time to make sure that the items you're buying are the real deal. Yeah. So tell me a little bit about investment strategy. Let's cover that real quickly. When you look at your art collection versus your portfolio collection, how do you differentiate the buy and hold strategy versus active trading when it comes to the factors and influence those? What influences those decisions?
Well, before I get into what influences those decisions, I want to talk about those two words you just mentioned. It's really called active and passive. All right, so you've got active investing and passive investing. Active investing is going to be, I have something, mutual funds that are going to be managed by a professional fund manager. And he's going to have eyes on that investment every single day. He's going to make the decision, do I get rid of this stock? Do I, increase my holdings in this bond? Do I pivot from energy into technology? That's what an active management portfolio is going to be. And then the passive is going to be more along the lines of buy and hold. All right. S&P 500 index, art, precious gems, Rolex watches, if so be. So that is going to be your longer buy and hold. If people try to confuse active investing with art, they're going to get burnt, because that's going to be the buy and flip and try to get out of it real quick.
Tough.
That's going to be tough. And you could probably do an entire podcast on that yourself, but we're not going to, I'm not going to get into that right now. But under the managed portfolios that you've got out there, and it could be for hard assets as well, you've got the index strategy, which is going to be to keep pace with what the current market value trends are. All right. Now you can also use that as, like I say, an S&P 500 index or gold, if you want to input gold there. Okay. Momentum. Momentum is probably best described as where we are now in the Highwaymen art movement. It is buying high but selling higher.
Right.
All right.
Momentum.
So pretty much momentum investing. And then the last one of the three is value. And that's going to be, you're going to buy low and sell high, which everybody jokes about. That's what it should be. But there's truth to that. So if you can pick up a piece that's,
undervalued,
right. Somebody is in this tight situation and a declining market, and they say, hey, I need to get out of this Alfred Hare or this Harold Newton for $3,000 or $4,000. Can you help me? And your knowledgeable people are going to be, yeah, I'll help you out with that.
Be happy to do it.
I'll be more than happy to do that. And then that person is going to either buy that piece and flip it, or they're going to hold it. I'm holding it.
Right.
At that point, I'm holding it.
Correct.
So we've got those three types of managed portfolios, and then you can use any of those threes for your underlying investments, for your Highwaymen art, your hard assets, and just, again, be knowledgeable of what you're going into, work with people that are experienced and trustworthy, and by all means, I support anybody who wants to have a portfolio with those type of assets in it.
I think that's a good way to go. We talk about major players. Which major investment firms or funds that you know of incorporate these hard assets in their strategies, and lessons that you've learned from that? Chase has a big portfolio. Bank of America has a big portfolio on hard assets, and we're starting to see some of the diversification of those assets beyond things like gold and real estate to far less traditional things. Is it a trend in the investment world, or is it here to stay?
It's here to stay.
It's here to stay.
There's an old saying that the rich get richer. That we've all heard that. All right. BlackRock, Fidelity, Vanguard, State Street Global. Those are your four big companies that are using hard assets, but they're using them on a much greater scale than art. I don't believe that the big companies are into the art movement yet. That's more along the lines of venture capitalists that are out there. Right. Possibly some hedge funds as well. But your big boys are looking at
partnerships.
Limited partnerships. Your big boys are looking at city blocks in New York.
Yeah.
Buildings in Chicago for real estate. All right.
Okay.
They're looking at dams for energy in different parts. So that's when they hear hard assets, that's what they're thinking, and that's where their go-to is. Because as a painting goes, and we may get into this later about the limited buying of the different pieces of a particular painting, I'm not a big fan of that.
No.
Okay. The whole, I don't know what the name of it is.
A Harold Newton painting is a lot more liquid than a dam.
Okay, yeah, you're right, but a dam is a heck of a lot more valuable than a Harold Newton painting.
Depends upon how many you have.
Well, that's true. That's true. And as long as the water's not going over it, it's still going underneath it.
Right.
But to them, they want the bigger pieces of the pie. They don't want to mess around with art. It's not valuable enough. You can
understand.
You could take a key painting that's like the goldfinch that's over in The Hague, or the lady girl with the pearl earring. which is a $600-700 million piece of art. Well, first of all, they just can't go out and buy those.
Right.
And they'd rather buy...
And liquidity is an issue.
Yeah. They'd rather buy a $600 million piece of property and get income off of that.
Right.
So that's why it's... Yeah, you kind of see where I'm going with this. That's not in their wheelhouse just yet.
Let's talk a little bit about valuation and appraisal values, things of that sort.
All right.
When you look at a product like gold or real estate, the value is reasonably finite. You could look it up. This is what it is. There are comparables. Gold is art is a little more esoteric, particularly Highwaymen art, which is currently a regional story. It is a Florida story for the most part. Let's just say it's an east of the Mississippi story for the most part. As it becomes a national story with the movie breaking and things of that sort, the story as a whole is woven very carefully into the American fabric. Okay, the entire story of overcoming the adversity, living out the American dream, and they're doing this not with hard work, but not in the fields. They're doing it not in a steel mill or a coal mine or anything like that. They're doing it with art, and bridging the gap, the racial gaps, the gender gaps, all of the age gaps, all of those things. Art bridges all of those gaps, and it's well blended into the portfolio. We touched a little bit about value. Do you look to auction trends as the real value, as the solid core foundation of value, the way you look at other hard assets, real estate, gold, or do you look more, do you give it a softer look and see it more for its artistic value?
Are you asking me this question as a financial planner or as a person?
As you, yeah.
Because what I'm going to say is going to be different from...
Okay, we could qualify both, I guess.
Okay,
go ahead.
All right. So me personally, what I migrate to, and I want you to rephrase that last piece of that question you said.
Okay. Do you see it as, do you take a softer look at it?
Got it. Okay.
As a collectible, and when you evaluate the value, or do you go finite to auction trends? That's what it is.
No, I do not do that.
Okay.
No,
What's the process?
I look. Okay, to clarify it, I've got over 45 pieces personally. All right, and and I won't say it here, that I upgrade my collection and I sell my other pieces off online.
Right.
And
which is a good thing to do, right? Top grade
right.
all the time.
So something that's happened with me as far as the trend is, I look at a piece, and if it doesn't take me in like that, even though they could say this is a phenomenal Lem Newton right here, it's like, okay, great, hey, it is, yeah, does nothing for me. Does that mean if it's up for auction at $2,000, do I want to get it?
Right,
maybe, but not really. But it's got to, as I tell people, it's got to reach out and grab me by the face and pull me in. Right?
So if it doesn't take you to the finish line, you're not going down the road with it.
And you and I have had this conversation before, that one Gibson piece that you had that I fell in love with. I said, I want this. Or that Harold Newton Fire Sky.
Yep.
Right? I want this. I'm going to get it. And those were ones that grabbed me and pulled me in and said, I'm going to go to the mat on this. Not because of what I think the value is. It's because I like it. I'm going to hang it. I'm going to display it. I'm going to enjoy it. I'm going to talk about it. I'm going to show people. If I'm going to overpay for this particular piece, I'm okay with that because I know what I'm doing.
Got it.
All right. 10 years down the road, I'm not worried about what I paid for it because I'm already in the money, and you've already told me, hey, if you ever want to sell that blank blank that you got from me,
I'm in.
You're in.
I'm in.
So I know when I bought that one Harold Newton Fire Sky, and I paid up for it in a premium, and you had said it's the best Harold Newton Fire Sky I've ever seen.
It still is to this day.
Still is to this day. And I've got
and that offer stands if you ever want to let it go.
Nope.
I'm in.
I appreciate that, but no, that's how I would personally, as a financial planner, speaking to myself, I'd say, like, what the hell are you doing? You're going a little bit high on this, but
you take a softer look, and the answer is
you take a softer look at it. That is correct.
Okay, let's talk about tax implications. When we talk about hard assets versus soft assets. You know, you buy and sell stock, you get a 1099 at the end of the year. You got a gain that you owe taxes on. End of story.
Yeah.
Okay. It's a very visible transaction for the most part. Whereas the tax implications for softer assets like for hard assets like art, maybe not so much, because you're trading, you're doing a like kind exchange in and out. How does all that work?
All right, so I'm going to first preference it before we even answer this. I am not an accountant. So I am not giving tax advice here.
Gotcha.
Right? I would say go to your accountant and have them answer those questions for you. With that being said, traditionally, 28% capital gains tax on art that appreciates over time.
Right, but if you're trading into another piece, if you're taking $1,
I'm not an accountant.
we're going to look at that. We'll get to that one.
Okay.
We'll get to that one with another team.
But
okay.
but I will say that the traditional short-term capital gains tax is less than 1 year of holding it. Right. Long-term capital gains tax is holding something for a year or longer. But again, I am not here to talk about taxes. That is a CPA question and should be directed towards your CPA. I could answer it, but I'm not going to.
There are some exciting things coming down the road in terms of taxes on collectibles, as you know. As it stands right now, auction houses and dealers auction houses who sell art on behalf of collectors are not required to 1099 the collector, although the law under the COVID Relief Act called for that, and it's been put off and put off and put off, and I believe it's been put off again in 2025 before we are no longer required to report the results. But we see that coming probably 26. I think it's going to happen in 26.
Okay. For the viewers out there that are going to be watching this, again, I am not giving you any tax advantage or information, but I think what he just said is sell it before 2026. That's
at least we hope, But we said that in 2024 when we thought it was going to happen in 2025. Right. So we really don't know how that's going to happen. Emerging trends. We talked a little bit about fractional ownership. Neither of us are a fan of fractional ownership of our portfolios and anything like that. It's one of those things where it's a labor of love building an art collection or a collection of any sort. Bourbon collection.
I have a bourbon collection.
You've got quite a bourbon colletion. Yes, you do.
The problem with that is that you tend to consume your profits if left unchecked for too long.
You have.
Yeah, yes.
You have.
But if we could talk about something I would like to speak about is when it comes to collections. If you're going to be having a collection, make sure it is a viable collection and not a hobby or a fantasy. So, and I'm going to reference, my wife is going to laugh when she sees this, the Beanie Baby craze.
Right.
All right. People were spending so much money on these Beanie Babies and going out, and what happened? It completely collapsed.
It didn't meet the muster of what a collectible is. And we've covered this several times, but in order to make something a valued collectible, it has to be, one, an icon of its time, which Beanie Baby was. Two, it has to be highly consumed and destroyed in its time, far in excess of its manufacturing capability. Highly consumed and destroyed. So that as that youthful person who enjoyed it as an icon of its time reaches the peak of their earning capability later in life, and they reach back into their childhood for that icon of its time, and it no longer exists. They just want the best one that does exist in the market, the best Mustang that ever existed, the best Mickey Mantle baseball card that ever existed. They don't want a Babe Ruth baseball that the cover's been ripped off. They want the one that's pristine and white, that's been in a glass case, and that icon of its time. They've reached the peak of your earning capability. Reach back, as you started this conversation with. You never want to live anywhere else but Florida.
No.
So when you came back to Florida, Florida art in your home was the natural thing.
It was.
As you reach the peak of your earning capability, you reach back for that icon of your childhood. And when these paintings were $5, $10, being sold on the side of the road in Palm Beach, where you lived as a kid.
Yeah.
Yeah. Risk management. Everyone has in their home, investing in hard assets. Do you see risk in balancing portfolios? How do you know when you're art heavy? There are days that I feel I'm art heavy.
Well, that's easy. I had this conversation with friends of mine who are realtors and have 8 or 9 properties, and they don't have they don't really have any assets put away, but they've got a couple $1 million in real estate. And I tell them, I said, sell a piece off, go into the market, build up some liquidity, and I would say from a risk management standpoint, you can be overweight, because if you have all of this art, let me rephrase that. You're going to have a cost associated with protecting that art with insurance, because you're not going to have a huge art collection and have it not be insured, or a car collection, or a gun collection, whatever it is. And something that is a little bit of an issue is low liquidity when it comes to having a lot of art. Now, this type of art, I don't feel is going to fall into that category when you're into the multi-million dollars and you have to get out of it. But if you've got...
This is a high liquidity product.
Yeah, this is a high liquidity.
Never had issues with that.
They can walk into you at any time and say, Paul, look, I'm having a hard time. I've got this Alfred hair piece.
We write checks.
Can you buy it from me? And you're a good guy, and you'll say, absolutely, I'll do that. Yeah. And same with me, and we've even talked about this with other artists too, who have approached us, and we've done it out of respect for them, not necessarily because we wanted to profit. We actually probably took a little bit of a haircut doing it, and you know what I'm talking about. I'm not going to bring that up, but that is a little bit of risk management, the cost, low liquidity. It's an outsider art movement, so there's not a lot of knowledge through other states. So if you were in Nebraska and you had to liquidate it, I don't know if they're going to look at it and say, who's this? I don't know who this is.
But that's all about change and become a national story very, very quickly. And we're seeing that. You collect Highwaymen art.
Yeah.
What do you see the future? If you had to look 5 years down the road, what do you see here?
Well, if everything goes according to plan, and it never does, it's like the old saying, I told God what my future and my plans were. He looked at me and laughed, right?
Okay.
So I see this on the precipice of really taking off. I do.
I agree.
I have watched personally values go up over the last 5 years. I mean, since COVID, it's been an absolute explosion. There's a lot of people in this industry that are very knowledgeable, heck of a lot more than me when it comes to this, and are doing their best to keep the momentum going, the story going. And I feel sorry, actually, for the people who are letting this stuff go. But if they weren't, you wouldn't be in business.
We're starting to see some bigger and bigger players come in.
Yeah.
People who could easily buy up a significant portion of the marketplace, but then they look at it and they go, we just want the top 5%, which takes, we talk about good, better, best, and masterpiece, okay?
Right.
Well, when masterpiece is all gone and best becomes the new masterpiece, good becomes the new better, and better becomes the new best. And we've seen that already happening in a big way, in a major way, in the last 5 to 10 years in the world of Highwaymen art. And but yet still masterpiece paintings come into the market, and we all have to compete fiercely for them. But they do pop up every now and then.
But I think that the good pieces that we've talked about, and the upper echelon of the various artists, you're going to more than likely see a solid 8 to 12, maybe 15% increase year over year until it decides to peak, and we don't know where that is. It may never peak.
Well, we're going to finish up on that one. You heard it from Brit Deviney personally. Thank you very much for joining us at Highwaymen Social. Look forward to seeing you again next week.